Okay, welcome everyone. I think we'll go ahead and get started now. We might have a few more stragglers coming in, so we'll just admit them as that occurs. So thank you all so much for joining today. My name is Ashley Hunt. I am working with NABO to help do some of the programming for early this year. So it's my pleasure to kick it off with Courtney Durandi. She is going to discuss some blind spots in a growing business. So without further ado, I'm going to go ahead and make her the host so she can share her screen with you and you can see the slides. Take it away, Courtney.
All right. Good afternoon, everybody. And just a thumbs up. You're seeing my slides, right? Not like some other screen. Okay. Perfect. Awesome. Well, thank you guys for being here this afternoon so that we can talk about these blind spots. So just seeing kind of the attendees, I think I've met most, if not all of you, but I'll do a quick introduction of myself. I am Courtney Durandi. I am a NABO member. I'm currently serving on the board of NABO as co-director of corporate partners, and I'm managing partner of our firm. And so I'm a CPA. I've been serving small businesses and nonprofit organizations for almost 19 years now. And most of my career has been spent serving clients. But as I transitioned to firm leadership and the managing partner role, I've also gotten involved with our business development efforts. So I lead our sales and marketing efforts for the firm, as well as leading our vision and strategy for the firm. So a lot of these blind spots that I'm going to talk about, I have experienced firsthand as a business owner at TDT, and I have been able to help clients through navigating these blind spots as well. So we are going to go ahead and get rolling here. So one of the quotes that I heard the most frequently during 2020 was, "We don't know what we don't know." And I think that is a perfect description of a blind spot, right? So a blind spot is this thing that exists just outside of your vision and you don't even know that it's there. You maybe even looked around for it, right? Like if you're driving down the road and you check your shoulders, you check your mirrors, you don't see anything. And all of a sudden, bam, there is somebody just outside of your vision. That's what a blind spot is about. And I think this quote of not knowing, like we don't know what we don't know, is a perfect way to describe a blind spot. And as our businesses grow and scale, there are blind spots along the way. Oftentimes, things are going well, just like we're cruising down the road and we're enjoying growth, we're enjoying profitability, and then all of a sudden, these new problems and opportunities can seem to come out of nowhere. And so, as each stage of business, as you go through each stage of business, whether it's startup, growth stage, or maturity, there are new challenges and opportunities. And just when we think we've figured out how to navigate one stage, the growth and scale we work so hard to achieve results in this whole new set of challenges that we didn't anticipate, and these are blind spots. And so because we've been working with successful business owners for over 45 years navigating these blind spots, we created this list of these 5 common blind spots that we see for growth stage businesses. So there's different blind spots in startup, there's different blind spots in maturity. We're talking about the blind spots that commonly come up when you're in that growth stage. You've made it past startup. It could be that you're in maturity and you're moving to reinvent yourself or your business and going through another growth phase, or that you haven't matured yet and you're in that growth stage. So these blind spots are really going to be applicable to businesses in that stage. All right, so let's get started. I just want to confirm, can you see my first slide with this first blind spot you've reached? Okay, awesome. So the first blind spot that we're going to talk about, you've reached your limit and you know there's got to be a better way. So as our businesses grow, the demands on our time and our energy grow as well. And it can be really common in the growth stage to find ourselves and our team members uh, basically consumed with all these activities that creep beyond our competency or our capacity, or maybe both. So when we're in startup mode, we have to be kind of scrappy, right? We have to like figure it out and get it all done. And that works during startup. As you grow, you have to take the opportunity to start seeing really where you provide the most value to your business. So when we carry out roles or responsibilities in our business that don't match our greatest skills and desires, that can be risky. Kind of, I guess, at worst, it will stall our growth. We can't continue to grow and get to the next level of our business if we're not operating where we are really in our sweet spot. Um, at best, it's just boring and unfulfilling, right? Who wants to spend all of their time and energy on things that they don't really love and they're not really proficient at? Sometimes it's a proficiency issue. Sometimes we're just not good enough at these tasks that we've been stumbling through and figuring out how to do as we were in startup mode. And we can get them done, but really, if somebody else wouldn't pay you to do these things for their business, your business probably shouldn't be paying you to do those things either. So if you're doing your own bookkeeping, your own payroll, your own website design, your own hiring, and somebody else wouldn't pay you to do those things, essentially that's what your business is doing, and that might not be the best use of resources. And it might not be proficiency. Maybe you're really good at those things, but as you grow, you're going to get to a point where you're not even going to be able to do all the things that you're really good at in your business. So that's the first blind spot. You kind of reach the end of your capacity, your limit. You know there's got to be a better way. You can't continue on as you have been. So what do you do about it? You have to realize that your greatest contribution to your business is doing what you are best at and most passionate about. And all the rest needs to be handled by an appropriate mix of contractors or employees carrying out some very clearly defined processes and procedures. You don't want to just delegate everything and let it slip away from the way that you know it should be done and what matches up with your values and your vision and your brand. So you have to have some clearly defined processes and procedures, but it doesn't mean that you're the only one that can do it. Now, I know for a lot of entrepreneurs, we thrive on innovation. And so thinking about processes and procedures can trigger some nausea or disinterest, but it doesn't mean that you have to be the one to lay out all the processes and procedures. That's kind of the point of this blind spot. There are people out there who can help guide you through clarifying your processes and procedures. So look at ways that you can automate your processes. And this doesn't mean that there has to be a technology application to solve your problems. There might be. It could be a software solution that will automate some of the processes that you've been going through. It might just mean clearly articulating who does what when so that it can be repeated without you having to um, put a lot of thought and energy into every single thing. So automate your processes and look for ways to integrate different software solutions so that you can spend less of your time. Another way you can handle this blind spot is to outsource certain functions. So outsourcing can be a really effective solution to temporarily supplement your team for a special project or to expand your capacity or find an expert to help with a certain area of your business. So there's lots of different ways that businesses use outsourcing. One example for us at TDT, so I mentioned I am involved with our sales and marketing efforts, and the first year that I was in that role, I did a lot of work on writing some of our website copy. So I'm kind of uniquely positioned that been serving clients in our business for so many years that I really understand who we are and how we help, which is a great recipe for writing web copy about how we can help and clarifying who we are. But it took a lot of time because that's not writing web copy is not a proficiency of mine. So we outsourced when we had some new pages to write, we outsourced to Caitlin Sult at Illuminated, and she wrote web copy in a fraction of the time that it took me to write the same volume of pages. And she had a process that she went through to be able to write in my voice and to um, articulate who we are and how we help without me having to do it. And so, I think when we think about outsourcing, we think, well, yeah, but we had to spend money on that. Yes, we did. But in the time that we paid Illuminated to do that work, I was doing other things for our business that made us more money than it cost to pay for the outsourcing. So we have to think about leveraging resources, either outsourcing consultants or hiring employees, not just as a cost, but think of the opportunity cost that we are incurring when we're not leveraging our best use of skills and abilities as business owners to do for our business what only we can uniquely do. So find ways to outsource different components of your business. And then lastly, clarify roles and responsibilities. So a lot of times there are um, as we grow and scale, there are people doing things in the business that don't align with their passions or their proficiencies, or certain people are overloaded. And when you look to outsource different functions or add new employees, it can be hard to know where to begin, what things to delegate. So when you can clarify roles and responsibilities, it makes it a lot easier to bring other people in to your processes. So this is something that we go through a process like this with clients to help them optimize their processes. And so what you're looking at, if you were going to do this yourself in your business, here's where I would start. Go through the key functions of your business and just start having your team members, or if you're the one doing it all, just start bullet point listing out the main, say 5 to 7 roles and responsibilities of each main position and component of your business, and then find ways to delegate items to either other employees or outsourced service providers to better leverage other people's time. So first, kind of figure out your current state. This is how it happens, and then look for ways to automate those processes, to utilize technology applications, better integrate systems, and provide clarity around roles and responsibilities so that you can more easily hand off different components. So those are ways to really to avoid this blind spot, because if you haven't gotten there yet, you likely will at some point as your business grows and scales. You will find yourself where you kind of reached your own limit, either of skills or capacity of time or both, and you've got to let other people help you in different ways. All right, the second blind spot, your gut feeling for what's happening in your business is no longer accurate. So, a lot of times as business owners, we have in our minds an expectation of what the numbers should be. And when the financials don't reflect those expectations, we assume that the financials are wrong. Sometimes that's true. Sometimes transactions haven't been properly recorded and there are adjustments needed. But in a lot of cases, the financials are correct. It's the calculations in our heads, in the business owners' heads, that don't account for everything that actually occurred. Because as you grow and scale, you just can't keep it all in your head anymore. When you are starting out and when you're doing everything, you're intimately in tune with everything happening in your business. And as you grow and scale, like we talked about in Blind Spot 1, you cease to be able to do it all. And so you have more people contributing in different ways to your business. And so all of a sudden you just can't keep all of this in your head anymore. So it doesn't mean that you need to take it all back and so that you have an accurate picture in your head. It means it becomes really, really important to have relevant financial reports that give you a clear picture of how your company really makes money. Without this information, you can end up with lots of activity, even high gross revenue, but little profitability because you're doing all of this stuff without enough information to review the results. So if this is a blind spot that you are facing in your business right now, is that you like your gut feel for what's happening is no longer accurate, here's what you can do about it. Focus first on having accurate financial reporting. Almost without exception, a business's accounting system needs to be restructured to provide more meaningful information. So a lot of times, as you grow, your chart of accounts, the format for your reporting can get, outdated or irrelevant. So sometimes people will start with a generic chart of accounts, which is what's going to feed your profit and loss and your balance sheet and determine what level of detail you have access to. And as you grow, you need to refine that chart of accounts that is the basis for your profit and loss statements in your accounting system. You have to make sure it's set up to gather the information that you need at the appropriate level of detail. It can be tempting again to think that we have this information in our heads, but we really need to capture it and analyze it. So one thing that you might think about is, how relevant are your reports? If you get a monthly profit and loss statement from your bookkeeper or your accountant, does it tell you the results of your business activity in an appropriate level of detail for you to make decisions and have insights about where your company makes money? If not, you need to think about what would be more relevant information to get from that report. And then we have to back up and say, okay, then what do we need to change about the chart of accounts and the transaction level entry of data so that the reports we get can give us the information that we need? So if you're thinking about your expense categories, at a minimum, you have to have certain categories to feed into your tax return. Beyond that, it's up to you to determine what additional expense categories are relevant to you and your business. You want to keep things simple and only get more detailed or granular when you really need the information. So think about what is meaningful and important to you, because if there's way too much on your profit and loss statement, all of a sudden nothing stands out anymore. And if it's too summarized, then you have to have all these additional ancillary reports to dig into the details. So finding that balance, thinking about what is most relevant to you. Now on the revenue side, think about your different revenue streams. And you need to be able to tell from your profit and loss what is most profitable to your business. So maybe you need a profit and loss by major product or by geographic location or by industry. Maybe your profit and loss doesn't have to be at that detail, but just your revenue reports do. So do you know the margin from your major customers or your major products or services? Can you tell your profit and loss by profit center? These are the things that you need to have from your financial reports so that they're not just accurate, but they're also relevant. So having the appropriate level of detail, making sure you've got that basic accurate accounting, but the profit and loss, the balance sheet, any of the reports that you're looking at are designed in a relevant format so that you can really use them to see how your company makes money and if all the effort and energy that you and your team are putting in is really providing any results. And I think when I mentioned, a lot of times we have in our heads, what these numbers should be, sales mix and profit margin are two numbers that really stand out that people think they know, like they think they know which products make them the most money. They think they know who their top customers are. They think they know how much money they make from a product or service. And then when you start to actually report, it can be um, very a rude awakening for people to really see, oh my goodness, that is not what I thought. And again, sometimes it could be that the financials aren't accurate and there needs to be a correction in the bookkeeping and transaction entry level. But a lot of the time, it's that you just can't account for all those details in your head anymore as you grow and scale. So having relevant, accurate financial reports that tell you not just your revenue and expenses, your profit and loss, but other key pieces of information like sales mix, profit margin, profit and loss by profit center, and your expense categories in a relevant amount of detail. That's what's going to help you to bridge that gap to when you can no longer keep all the details in your head. You've got to have good reporting that you can rely on to really get results. Your reports should be turning into results for you. And if they're not, then this is an area where you can put some effort around shoring up these levels of detail. And again, it comes back to starting with the end in mind. What do I need to know? What is most important and relevant from my business? And then backing into what do I need to change about my chart of accounts and my accounting system structure and what happens when I enter transactions or when somebody enters transactions for me so that all those details can be entered so you can get the information you need out of the accounting system. All right, number 3. You're spending a lot of time putting out fires instead of preventing them. So, as your business grows and scales, you can end up spending all your time putting out fires. As you add more people, more activities in your business, it can become harder to identify the underlying issues. And so all of a sudden, you can't tell if you're fixing symptoms or if you're fixing the underlying causes because you're constantly putting out fires. And so there's not a lot of time to really focus on, is this a symptom of a bigger problem or am I really addressing the problem? And so um, a quick story that you may or may not have heard, the parable of the river. So, this parable tells of a group of campers settling on a riverbank, and one camper notices a baby in the river, immediately jumps in, saves the baby. Then another camper spots another baby in the river, and another, and another. The campers frantically rescue as many babies as they can, but there are so many, and they know they can't save them all. They're frantically saving as many as they can. At one point, one camper gets out of the river, starts walking upstream. The other campers are outraged and they ask, "Where are you going? Look how busy we are. We need you here." And the camper replies, "I'm going upstream to find who keeps throwing all these babies in the river." You have to deal with the acute issues in your business. You have to put out the fires, save the babies, whatever. But you also need a way to prevent and more quickly detect future issues, or you will spend all your energy putting out fires, saving babies, instead of getting to the underlying root cause or the upstream issue. So here's what you can do about it. Name the fires. Identify your upstream issues. The financial statements, those report the results of all the activities in your business. So we talked about that in blind spot number 2. That's important, right? You have to know what is going on. The financials tell you what has already happened. But if you want to impact your future results, you also have to identify key performance indicators that focus on the activities happening right now in your business. So both are important. You have to have them both. You have to have accurate, relevant, timely financials so that you can tell what your results are. But if you want to impact what's happening in the future, you have to have a focus on the activities happening right now in your business, those upstream issues, those underlying root causes. So I'm going to give you an example. So let's assume the current fire you're fighting is tight cash flow, a very common issue for small businesses, especially in growth stage. A lot of times you have to invest additional cash outflow and the returns don't come until later, or there's just so much chaos going on in your business as you grow and scale that you don't have time to think about all the different things that are impacting your cash flow. So let's assume your current fire is tight cash flow. Tight cash flow is just a symptom. There are hundreds of underlying causes that could be your upstream issue causing tight cash flow. So let's assume that's your issue. Your sales are high, your margins are strong, but it's taking too long for you to collect payment from your customers. So a lot of business owners will monitor receivable days. So the average number of days it takes your company to collect payment from your customer. So let's assume that your receivable days is 65. You can measure and monitor receivable days all you want, but it's not going to change your results. It tells you what's happened, and that's important, but it's a lagging indicator. It is not an upstream item, it is downstream. This is a baby floating by in the river, right? This is not the person throwing them in the river. You have to identify the underlying activities, the leading indicators that impact your receivable days, and measure and monitor those. So maybe it's taking your team too long to get the customer invoices sent out. Maybe you don't have a team. Maybe it's you. Maybe you're so busy delivering the service that it's an afterthought to invoice your customers. So you're doing all this work and getting all these great results, and you're selling highly profitable consulting projects, but you're not invoicing your customers quickly enough to get them to pay you quickly enough to manage your obligations. So maybe that's the problem. Maybe that is the upstream issue that's causing your time, but they have a lot of mistakes. And so your customers aren't paying you because they're emailing, calling, and saying, hey, this is incorrect. There's an issue with this invoice. And so they're not going to pay it until it gets resolved. Those are just two examples. There could be tons of different reasons that cause underlying problems. So you have to identify those underlying activities and then measure and monitor those. So you can measure receivable days, that's fine, but it's not going to change receivable days. Instead, if this was your problem and you realize it is a problem of invoices having too many mistakes, then start measuring and monitoring the percentage of invoices with errors, and then go to the people responsible for issuing invoices and address the problem with them. Our goal is to have 99% of our invoices issued without an error. Right now, we have 75% of our invoices that are issued without an error, and we want to ratchet that up to 99%. That is our new measure, and these are the reasons causing the errors, and now we're going to see how you do at improving this. That's just an example. But the common problem, the raging fire of cash flow, as an example, you have to get down to those underlying activities. You have to look upstream and see what is causing this problem. And then you have to create measures around them. And you create a dashboard with those key measures, a scorecard, a dashboard, whatever you want to call it, where you are measuring and monitoring those leading indicators. And you can measure and monitor lagging indicators as well. But if you only have lagging indicators, it's just going to tell you what's already happened. And it is way, way more fun and way better use of your time and energy to measure things that are happening right now and identify issues that you still have a chance to correct and influence the future results. So if this is something that's going on, if this is a blind spot that might be going on in your business right now where you're spending so much time and energy putting out fires, you've got to start thinking about what is causing these fires. So think about your the areas of your business, finance, operations, your customers and sales, your people, your workforce. What fires are raging? What key goals are you striving to accomplish? And then dig down into those underlying activities, narrow down the indicators that you can measure and monitor, and put them on a scorecard or a dashboard, and start focusing on improving those results. All right, number 4. This is a good problem to have. You have more cash than you're used to, and you don't want to waste it. So, like in the last blind spot 3, we talked about tight cash flow. That's often the problem when we talk about cash. But as your business grows and becomes more profitable, you will find yourself with a new problem of excess cash. And you might think, well, is more money really a problem? It can be. When things are going well, it's easy for costs to creep in. It's also easy for inefficient processes to just become the status quo. Sometimes the comfort of excess cash can cause you to undermine your own success. So, what can you do about it? First, create a budget. Use your excess cash as an opportunity to plan for the future. Create a budget so you have a plan for what you're going to do with every dollar you make. Now, a lot of times we think of budgets as a tool to help us stretch our dollars when things are tight, and they certainly can be effective in that case. But ultimately, the real purpose of a budget is to create a plan for spending your money, whether you have a lot or a little. So just because you have plenty of cash doesn't mean that you shouldn't create a plan for how you're going to spend it. Also, it doesn't mean that you shouldn't be scrutinizing your spending habits and looking for opportunities to increase revenue or decrease expenses. So, as you create your budget, you want to evaluate the profitability of your various products or services and assure that your marketing budget aligns with promoting those products or services that are most profitable. So, this goes back to having that relevant financial reporting. If you know which products or services provide you with the most margin, they're the most profitable products or services for you, you should be focusing your marketing efforts around promoting those products and services and creating a plan for how much profit that's going to create for you and how much of how many dollars of your expense budget you want to put towards promoting it, and have a plan for how you're going to use that excess cash. You might want to think about you taking advantage of a business credit card. So again, when we have excess cash, we can start to let additional costs creep in or not take advantage of all the different opportunities there are to earn rewards or rebates or discounts. So don't let that comfort of excess cash prevent you from really maximizing these opportunities. Utilizing a business credit card for purchases that you're already making can help you not only earn rewards or travel points, but it can also help you better control the timing of the cash outflows. So we're definitely not encouraging people to rack up a bunch of credit card debt. That what we're saying is for items you're going to purchase anyway, rather than using a debit card or writing checks, if you can use the appropriate business card that earns the type of rewards that maximize the reward for your type of spending and the rewards that you can actually utilize, all of a sudden you are no longer leaving money on the table and you've streamlined your purchasing process. So if this is a blind spot that you're currently facing where you've all of a sudden you've got more cash, more profitability, and you don't want to waste it, decide on your goals, design your budget to achieve those goals. As you create that budget, maybe think about, are you paying yourself appropriately as the business owner? Are you paying yourself what you should be earning? Are you setting aside enough cash reserves? How much do you want to invest in research and development to grow and build your business? Maybe are you maximizing contributions to your own retirement or for the retirement of your employees? Maybe there's an opportunity to add additional employees or outsource relationships to take some things off your plate. Make sure your marketing budget is strategic and it's intentional, and make sure you're maximizing those credit card rewards. All right, and now the last blind spot number 5. You have a vision for your future, but you're not sure if it pencils out. So, a lot of business owners have a very clear vision for their business, and they're very good at creating focused strategies to help them achieve their vision. But a lot of business owners stop there. So, they create the vision and they create the strategy, and then they start executing the strategy. We believe there's one more step you should insert before that execution, and that is to see if things pencil out. Crunch the numbers. It can be hard to be confident about whether your strategies are going to actually get you the results that you're planning on if you don't take this time to crunch the numbers. And it doesn't have to be fancy, it could be just an Excel spreadsheet. But taking the time to really pencil things out and make sure that from a financial perspective and a numbers perspective, the strategies that you are getting ready to execute to achieve your vision will actually get you the results that you are looking for. So don't let your planning stop with a strategic plan. Take this next step and pencil things out. And again, it doesn't have to be a big fancy financial model. It can be a simple Excel spreadsheet. But you really need to focus on setting goals that are strategic and measurable and time keyed. They have to be specific. So instead of setting a goal to increase revenue, that's often like what we'll hear from clients is, oh, we're going to increase our revenue. We're going to grow from 1 million to 2 million in 2021. Okay, that's great. Let's be more specific about what that means and how are you going to do that? So maybe your goal is to increase the average revenue per customer from $1,000 to $3,000. Or maybe your average revenue per customer has to remain static and you have to increase the volume of your customers. Maybe you have to develop another product line. Maybe you have to add additional employees to create enough capacity, or you have to add another machine to create capacity. Whatever it is, take that next step of being more specific about what your goal is and build your assumptions around it. Think through, what is it that we really need to be doing in order to achieve that bigger goal of going from 1 million to 2 million? What are the assumptions? I'll give you an example. So we had a big revenue growth goal in our firm. And as director of sales and marketing, I have a big responsibility for achieving that goal. But I also have service team members who have to deliver all of the service. And so in 2019, at the end of 2019, I was working on creating our revenue budget for 2020. And Lorraine, I see Lorraine is on here. Lorraine Harden is our EOS implementer, and she was really good at helping us think through this process of, well, like, how are you going to do that? Like, how many new clients is that? What's the average revenue per client? She forced us to really think through these items. And so as I was developing my spreadsheet, which as an accountant, I love spreadsheets. I know not every business owner loves spreadsheets, but it really doesn't have to be complicated, or you can outsource this function if you need help with it. But I was thinking through, okay, I knew our big picture revenue goal. And then I had to get down to, so how are we going to get there? What services are we going to expand? Are we going to increase the average revenue per client? What are our goals? And so I created this revenue plan that was to add some revenue to existing clients, but the big part of it was adding new clients, new outsourced accounting clients with a certain average fee per client. And so when I took our revenue goal and divided it out into the number of clients that would be, knowing our average revenue per client, it was something like, I don't know, 55 new outsourced accounting clients. And I'm like, that seems kind of like a lot compared to what we added the last year. And so I talked to Monica, one of my partners, like, hey, do you think we could add 55 outsourced accounting clients next year? She's like, are you insane? That would be more than one new outsourced accounting client onboarded every week. Like, even if you could sell it, even if you could, if the demand is there and you could sell it, we don't have the team members in place to onboard more than one client per week for the entire year. That's not realistic. Like, okay, so let's go back to the drawing board. What do we need to do then? Do we need to increase the revenue per client? Do we need to have fewer clients that are larger so that we can onboard we don't have to onboard as many people and we're just doing more for the ones we onboard? That might be part of it. What about existing clients? Could we add incremental services to clients we're already serving because there's not so much to onboard when we add that service on? So you get the point. You have to set your assumptions and then determine if you're being ridiculous or realistic. Like it's good to be risky, right? Like it needs to be appropriately risky. It needs to be a stretch. You have to put some effort around it, but you don't want it to be ridiculous. And if you don't pencil things out, you don't have clarity around what strategies you're going to employ. And so when we clarified our revenue goal, then all of a sudden, me and my team could create a marketing plan that was focused on achieving the specific assumptions that we built into the revenue plan. So we went from a big goal of X dollars of new revenue per year to something more refined of we're going to do this and this and this. These are the ways that we can get to that revenue goal, and we have the capacity to serve them, and we need to market to be able to achieve these different things. So taking that next step to really pencil things out will save you a lot of time in reaching your goals because you have more clarity around where to hit your strategies. Because otherwise, our strategies can be too broad and too diluted, or they can get us results that we aren't positioned to be capable of. So if I wouldn't have done that penciling out, if I would have just been like, I gotta sell as many outsourced accounting clients as I can to hit this revenue goal, on the service side, we would have failed because we weren't positioned to execute on that. Even if I could have executed the marketing strategy to win the work, we wouldn't have been successful in serving them because we didn't go through the step, if we hadn't gone through the step of penciling it out and really testing our assumptions and knowing specifically where we needed to focus. So once you've got your specific goals and you've laid out your assumptions and you've found that appropriate mix of being risky but not ridiculous, then you can evaluate your progress. Then you have enough detail to know, where am I focusing my efforts and how am I doing towards achieving them? And it doesn't have to just be on revenue. This could be cash flow projections, expense management, profitability goals. Revenue growth is one example. And I'd say, if your business is heavily service based, then the revenue growth goal is probably one of the best things to pencil out because it's where you can make the most impact. It's where your capacity drives the revenue. If you are selling a product or service, then you might need to focus on other aspects of your strategy to pencil things out because your costs might be more of a driver. But if you're a service-based business, your capacity to deliver service is going to be one of your biggest drivers. So penciling things out. It could also be a what if scenario. What if we do this? What if we do that? Thinking through the different areas. So really taking the time to pencil it out, crunch the numbers so that you can see if you are um, if you execute these strategies to get to your vision, will it really work? So taking that at that intermediary step. All right, those are the 5 blind spots. So we've talked about reaching our limit and knowing that there's got to be a better way. This is when, as the business owner, maybe coming out of startup mode, we're used to doing everything ourselves. We are used to, kind of figuring it out. And as we grow and scale, we realize that the best way we can contribute to our business is by doing what provides the most value from our time and our talents. And it's going to mean that we're going to have to find other people to help us. We're going to have to outsource certain functions or add employees. We have to automate processes, integrate technology applications, clarify roles and responsibilities, or we're going to cap our growth at what we have the capacity to do. That's the first blind spot. The second blind spot, your gut feeling for what's happening in your business is no longer accurate. As you've grown and scaled, you can't keep all the numbers in your head anymore. You're not intimately involved with all the activities going on in your business. So you have to have a system in place to be able to turn your reports into results and be able to know what is happening in your business and have it in a timely, accurate, and relevant format so that you can tell how things are going and what all of your energy and your team's energy is producing so that you can make decisions and make changes based on what's been happening in your business, even when you can't keep it all in your head anymore. The third one, you're spending so much time putting out fires instead of preventing them. This is where you have to look upstream. You have to figure out what are those big problems, what are those raging fires, and dig down into the underlying activities. Think of those upstream leading indicators and start measuring and monitoring those leading indicators so that you can make changes in real time while there's still a chance to impact your results. The fourth one, you've got more cash than you're used to and you don't want to waste it. So you're going to start using a budget and planning how you can properly pay yourself, how you can set aside enough cash reserves, how you can scrutinize your expenses and maximize your rewards so that you don't let the um, kind of the common problem of this excess cash giving you this comfort and undermining your own success. And then the last one, you have a vision for your future, but you're not sure if it pencils out. So this is where we're taking that extra step once we have our vision and our strategy to then pencil things out, make sure that our goals are specific and that our assumptions are realistic but risky, and that we have enough information to be able to monitor our progress as we go along. So these 5 blind spots that most likely exist in your business right now. As businesses grow and scale, there just are new challenges and new opportunities that come along the way, and they can come at us like a blind spot. That, like I said at the beginning, we don't know what we don't know, and sometimes it can be really shocking and surprising when the growth that we work so hard to attain all of a sudden results in a bunch of new problems that we didn't anticipate. It's like then it can feel like you're doing something wrong. And these blind spots are common. They're part of growth. It doesn't mean that you want to slam into all of them though. So use this content as like steer assist for your business. So you can learn from a lot from your own mistakes, but you can learn a lot from other people's mistakes. And so we are able to create this information about these 5 blind spots because we've worked with small businesses and nonprofits for so many years and seen these problems occur. We've seen them in our own business as we've grown to maturity and as we grow towards really reinventing ourselves and staying relevant in the marketplace. These things just happen. You should anticipate that these blind spots will exist at some point as you grow and scale. So if you use this information as you're blind spot monitoring system and your steer assist for your business can help you to avoid slamming into these issues because you know that they're there and they're going to pull you back in so you can address it more quickly. So not that these things won't happen, but you'll know what to do when they occur, and you'll know to expect it to happen as well. If you have questions, we have a little bit of time here now. I'm glad to answer any questions that you may have. I'm also glad to take any questions one-on-one via email. I'd be glad to set up a time to chat with you if there's something more specific that you want to talk about your own situation. Just feel free to email me there or give me a call, and we can set up a time to chat. But I hope that this was helpful for you, and I hope that you just know that these blind spots likely exist or will exist as your business grows and scales, and just knowing that should help you to be able to recognize them and to steer clear of them. And if we do have questions, I'm glad to take them now, or Ashley, I can make you the host again if we need to.
No, I think you're good to go and take questions. I see there is one in the chat from Lorraine, if you want to tackle that first.
Okay, sure. Let's see. So Lorraine says, how do you advise owners to build assumptions to make sure the vision pencils out as we continue in uncertain times? Awesome. Great question, Lorraine. So this is where I think that some of those what if scenarios can be really helpful. So you kind of build your best case scenario, like this is what I think, and then you can stress test it and say, okay, here's my scenario. And then I'm going to copy it over. I'm going to say, but what if this? What if I only achieve 80% of my new client revenue goal? Or what if what if I can't increase my average revenue per client from 1,000 to 2,000? I can only raise it from 1,000 to 1,500. Using the what if scenario is a great way to stress test your assumptions and measure. Then when you're measuring your progress, you can kind of see, oh shoot, we're not on track for what I thought, so I'm going to have to be thinking about my plan B, not my plan A, or I'm going to have to really focus on what do I need to do to get my plan back towards plan A. Maybe it's my marketing efforts, maybe it's something about my product or service offerings. Using those what if scenarios, I think especially in this time of uncertainty, is one great way. The other thing I would say, when there is so much uncertainty, measure and monitor your results more frequently. So in predictable times, you might be able to monitor your cash flow or your P&L or your actual versus budget monthly. When things are really volatile and uncertain, you might need to do it every week or every 2 weeks because you need to be more responsive to what's happening. So that's what I would say. Two things. One, create some different what if scenarios, and two, monitor and measure your results way more frequently when you are in a time of greater volatility or uncertainty. Great question, Lorraine. So Rose says, is there a general rule for small business regarding what percentage of operating budget should be spent on sales and marketing? Oh, this is a great question. So there are, for specific industries, I know, because I monitor this for accounting firms. So I know the percentage of revenue that high growth accounting firms and lower growth accounting firms allocate towards their marketing budget. And we use that as a general rule of thumb, but it's probably not the same percentage as other small businesses in other industries. So I would look, Rose, to your specific industry and see what guidelines or benchmarks, maybe if there's some kind of industry association that can give you that guidance. Or I don't know if there's anybody, Kathy or anybody on here, that knows just more broadly or generically for marketing budget. But I know for us, for me, monitoring and measuring our marketing budget, I look to our industry specific guidelines. Kathy, do you know, or does anybody else have any feedback for Rose?
Ask me that if you're talking to me. I just want to clarify for people that if you're looking at that percentage, those are two different things. Sales and marketing are both huge hugely different things, although they fall together a lot when we're smaller. So just to be careful when you do find a percentage, and I heard 7% somewhere, 5 to 7, but just be careful. Those are two different, are you talking
Yeah.
about your sales staff, or are you talking about how much you're going to outsource to the printer,
Yep,
So
that's a great point, because even in the guidelines that we look at, it breaks it down even more granularly to different types of expenses, and it doesn't even include any salaries or benefits of employees. It's more like advertising and different tactics. So I think that's a great point too, is to, if you look at that benchmark, make sure you know what is and what isn't included. The other thing I would say, um, if your marketing efforts are successful, you should do more and more of them. As long as you're getting a return on it, double down, like do more. I mean, there are companies out there that spend way more of a percentage of revenue on marketing, their budgeted revenue, because what they do gets results, and so their revenue just keeps growing and they keep investing in it. So just making sure that whatever you're putting your marketing efforts around, that you are getting a return, because if you spend 5% and you don't get a return, you may as well have spent 2 or 0. But if you spend 10% and you get a return, then that might make sense to keep doing more. Great question. All right. Were there any other ones? I didn't see any other ones. Ashley, do you?
No, I think that's looks like it's everything. Courtney, did you want to share your slides to the participants or anything like that?
Yes, I would be glad to send a copy of my slides. And then I also have an ebook that goes through some of this content, the 5 blind spots, in just a more written form as well. And I can certainly provide access to that. And then, so I think, would it be easiest, Ashley, if you just give us the email addresses of the attendees and we can send out the slides and that information? And then certainly from there, if you do have any questions about your own specific situation that we didn't get to today, I'm glad to answer those individually as well.
Perfect. That works. I will do that for you, Courtney. And we are exactly at 1 o'clock. So we'll go ahead and wrap this up. Thank you, Courtney, so much. This was really helpful. Really appreciate the time. And thanks everyone for spending your lunch break with us. Hope to see you again soon.
All right. Awesome. Thanks, everybody. Thanks for being here. Hope this was helpful. Good to see your faces.